The following program is paid for by the Real Estate Radio Network.
You're listening to Real Estate Radio Fresno on 105.9 The FM KMJ. Now, live in studio, your host, local real estate expert, Craig Barton.
Good morning, Central Valley. I am your host, Craig Barton, and welcome to the Real Estate Radio Network, the most important hour of radio each week, here on 105.9 The FM KMJ. Real Estate Radio is a show dedicated to bringing some rational thought to that crazy world that we live in and helping you to rebuild the Central Valley's housing and credit markets. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted advice. And that's exactly what you are going to hear every Sunday morning at 7 a.m. right here on 105.9 The FM KMJ. Thanks so much for joining us. Michelle, what is that look on your
I was just listening to the words you were saying, and I was like, wowzers.
Wowzers. You were jamming to the music, too.
I was a little.
You were bob that head.
Do you remember when we first started this show?
Yeah.
Johnny had us hooked up with, like, some elevator music.
Yeah.
And you and I were like, people are falling asleep. We're falling asleep. So I just love our music.
It was 4 a.m.
Yeah, it was early we were on. Thanks, Johnny, for livening it up a bit. We like our new music.
We've evolved.
That's right.
I hope we've evolved. As always, it is so good to have our special guest host, Michelle Pettiscavalli. That's who you just heard, Michelle.
Hi.
Good morning.
Good morning.
Awesome to have you here.
Thanks.
Michelle is a licensed local realtor and a trusted professional.
And every time you say trusted, I want you to say friend afterwards. For some reason, I'm going,
trusted,
you know, like on the Hallmark card, you're a trusted friend. Kind of like the dignified. But
I'm never going to live that
I do,
down.
though. I really, truly. Every time you say trusted, I
Trusted local professional friend?
There you
Wow,
go.
Professional
I like
friend does not sound good.
Oh.
No.
I'll throw friend somewhere else.
Throw friend somewhere else, okay?
Actually, let me work on that, and I'll get back to you next week.
Please.
All right. Thanks again for being here. Well, it's already gone wrong, and we're only about, a minute into the show?
Yeah. I'll be quiet.
That's why you're here. You're here not to be quiet.
Oh, okay.
All righty. Well, the beauty of Real Estate Radio Network is that it gives us, Michelle and I, and Timmer's in the studio with us today. We'll reintroduce you to Tim in a second here. Tim, it gives us the opportunity to reach so many people efficiently for 1 full hour each and every week. Our goal is to get you, our listeners, the timely and accurate truth about your local real estate market so we can help bring you
back home.
Yep.
I like that.
You were supposed to ask Johnny about some music there that was like you were talking about, the Hallmark touching.
Yeah. Johnny, can you work on some warm, fuzzy music? Makes me feel hugged.
Makes you feel hugged.
Yeah.
Does Michelle need a hug this early? And you know what? Just to go on the record, I had my coffee.
Nice.
I feel perked. Mm-hmm. Yeah. Maybe too perked.
It's been a long week. You better... have had your coffee.
Exactly. Well, on today's show, we're going to take a closer look at something that is extremely instrumental in our housing market's recovery here in the Central Valley. We're going to take a closer look at FHA financing. What exactly is it? How does it work? How can it help you? And what are some of the basic requirements for FHA financing, and why does it play such a big part in today's real estate market here in the Central Valley, as well as play a big part in our Central Valley's housing recovery? Well, how can it help you to get into you? How can it help to get you into your dream home? Well, we've got, again, mortgage advisor Tim O'Hare from Valleywide Homes.
Good morning, everyone.
Did he bring his bag of money?
I always have
bag?
my FHA bag of money is available.
Exactly. For those of you that didn't listen to us on our 4 a.m. Shift.
Shame on you.
Shame on you.
Shame on you for not hearing us.
Sleep was more important.
That's right.
Tim has a big bag of money. And Tim,
he's our loan advisor here.
Exactly. Loan advisor, yes.
How do I get a big bag of money to buy a new house?
And I'll show you how.
Thanks.
Awesome.
Right on.
Make sure you stay with us. If you have any real estate or real estate financing related questions, or just questions regarding the information that you hear on our show, call us anytime. I did say anytime on our off-air number at 800-979-3958. Or you can also check out our resources online at reofresnohomes.com. Or use press 4 keyword
KMJ, call Valleywide.
To get connected to us anytime. We'd love to hear from you. Well, you heard me say press for keyword KMJ, call Valleywide. Well, we want to help show you that you'll only need one button for the rest of your life. Now, what is press for? What is press for, Michelle?
Press for is my one and only directory to Craig Barton.
It's the only one?
Well, it's the best one.
Well, press for is for all those times.
Thank you for calling Press 4. Please say your keyword now.
KMJ, call Craig.
You have said KMJ, call Craig.
I love it. Now you're ringing, by the way.
And now my phone's ringing.
I know.
You gotta love it.
You hear it? It's vibing.
What a deal. Well, press for is for all those times that you're away from your computer and listening to our show.
Well, did you know, though, that since Tim was on last time, Tim got a smartphone?
Yep.
Timmy.
I'm moving up in the world.
So it can be used on those dumb phones, but we made him get rid of his. So now he has a smartphone, and we need to reload him because I'm not sure he's utilizing it.
How can we, it's funny you should ask, how can we help Timmer get Press 4 on his phone? You know, just go to the Press 4 website, that's press4.com, and follow the easy setup instructions. During our show, you're going to hear us say things like, to call into the show, just use the Press 4 keyword, KMJ.
Call Craig.
Call Craig. And in this example, your phone, just like Michelle's did, will call into our show. One button really can do it all. Well, in today's Find Your New Home segment, Michelle, would you help me find a new home? For crying
I'd be
out loud.
happy to, Craig, but we were just talking a little before the show. Our Find Our New Home segment is a great segment, and I really love working with our buyers to set up our searches to give them timely information. But I keep hearing in the market, so I'm holding you. Hold, Craig. We need to talk a little bit about those people who have a home, who aren't quite sure what to do. They think they may be underwater. They're really not sure. The market, they keep hearing all this press, all this news out there.
Sure.
And so I really think, outside of us just helping them find a home, let's talk about the home that they may already have. We've already talked about HARP 2.0. What if somebody is facing a potential of a short sale? What should they be doing? I think what we should be touching on today.
So the first question is really, where are you at?
Right.
And where are you at, not geographically, not what your address
Well, I'm in
is.
Pixley today. No. Right. Where's the market at in your neighborhood?
Where's the market at in your neighborhood?
Is your payment still affordable?
Right. And there are some of those that are, and some of those that are not. Nonetheless, there's a lot of frustration out there because, the guy down the street bought the house for, $200 and I owe $300.
Right.
And that was, a year and a half ago.
Yeah.
So where am I at now?
And really, where are you at right now?
Right now. Because you and I both know there's not a lot of inventory out there. So where, a lot of those short sales are moving quickly, much quicker than they used to. So how can we help the public to kind of figure out what to do?
Well, the first step is, I think you're exactly right. We've got to figure out exactly where they are at. We have to make a determination. Our best guess, based upon the market, based upon the last 90 days, which that's what most lenders are going to look at when it comes time for determining a valuation of that property. In other words, having the property appraised. They're going to look at the last 90 days and comparing apples to apples, single story to single story, two-story to two-story.
Conditions of your property.
Condition of the property,
Sure.
upgrades, amenities, what does it come with? In order to get it's called, in our profession, a competitive market analysis. So we're going to do our best job over the last 90 days. Now, keep in mind, this bullseye may be changing and may be ever evolving.
Sure.
It could be, to give you an example, short sale working on right at the moment. We're actually in contract. But 2 months ago, the value that we were able to come up with, or that we made a determination, here's what we are going to list the property at, it has changed.
Right.
We did, unfortunately, the property fell out of escrow. Other buyers, they just got a little antsy and decided to move on down the road. Well, what's the property, and that's the first thing that I want to do whenever the property comes back on the market is, so what is? Because when you're in escrow and it's a short sale, you're waiting, you hopefully did a good job as far as determining a valuation. You're waiting for the short sale negotiator to do their valuation, a third-party broker price opinion or some sort of appraisal, to see what it comes in at, to see how close you were as far as estimating your value. Well, now where do we go from there as far as it falls out of escrow? Well, that 60 days ago, or it's 60 days later, that can change because, as we all know, evaluation is a snapshot in time.
Right.
It's a window based upon the date that appraisal inspection is completed. So the valuation, in my estimation, changed a little bit. And what we saw in that area with two-story properties is there was another property one property right across the street that went up for sale. About 300 square foot smaller. It was a Brentwood, and that's the difficult thing in this particular neighborhood is there's a hodgepodge. There's a huge mix of builders, infill construction. There's Lennars, there's Brentwoods. Mm-hmm. So you're getting properties that you wouldn't normally find. You wouldn't normally see them compared. Mm-hmm. Well, you've got a Lennar right across from a Brentwood that's right across the street from a McCaffrey. It's just really a quirky area.
So did the value go up?
In my estimation, the value softened a little bit.
Did it?
Yeah, exactly. And so we're waiting right at the moment to hear back from GMAC, the negotiator from GMAC, to determine what their valuation came in at.
Yeah.
Well,
and I think that's where the public is. They're like, what is my house really worth right now? And it's an ever-moving target, but based on experience, we can give them some estimates of what's going on in your neighborhood, what are the last sales that happened in the last 90 days. And I think that's where they start, because it doesn't matter what the guy down the street bought a year ago. It so isn't applicable. We're looking at 90 days. What's this period of time look like, and how does that affect your property value? Because I think there's a lot of people out there who are just sitting, waiting, and think, not making a call or a decision.
I think
right?
with both you and Greg, when you talk to people, and hopefully people will call in with questions about this, but when you're talking to your potential clients, we're giving them advice of what's going on in the marketplace. Mm-hmm. Ultimately, we can give them as much advice as possible, but they're still going to need to make a decision. Do I want to short sale it? Do I want to try and refinance it? Right. But at least they can have a better educated information.
Well, and that's where, as Michelle says so poignantly, some people suffer from an electrician paralyzation.
Making fun of me. I know, it's analysis paralysis.
It's not. That's just how I say it. Tomato. That's just.
I just use bigger words than you, Greg.
Let me. I just use. Yeah.
I'm smarter than you.
I'm syllabally challenged.
Yeah.
Something like that.
I just like mine to spread out a
We can always say this, and we all have been there at some point in time in our life with regards to some decision that we've had to make. And I had to joke in the beginning because now I'm getting serious.
Oh gosh,
it is. How many times have you been so paralyzed with a decision you don't know what to do? You don't know where to go. You feel like your world is going to change, and most likely it will in some way. But here's the relief is the fear of the unknown in terms of where I'm going, where my family and I are going, what we're going to be doing. Are we going to be able to stay in our home or not?
Well, right, and burying your head in the sand is not going to give you the answer.
Mark my word, there are way more folks out there, and specifically folks that are listening to this program today that you can shake a stick at that are facing that type of decision. And the unfortunate thing is oftentimes it does what you just said, Michelle, is that's exactly what ends up happening is they get to a point where they've been paralyzed for so long that there hasn't been any decision. There hasn't been any information gathered so that they can make a decision at some point to determine where we are going, what we are doing, what's really best for our family at that point. So if you do want to see where you're at, all you need to do is call us on our off-air number at 800-979-3958 or press 4 keyword KMJ call Valleywide, and that'll put you in contact with the show at any time. We'd be happy to go through the process with you and just make a determination of where you are at.
Right.
And from there are other options. Well, we'll talk about some of those other options after our break, but now I want to take a look at today's hot property. Now, today's hot property, each and every week we are going to feature a specific property on our show, and it's a property that we'd like to bring some attention to and that we'd ultimately like to get into escrow at some point. Well, the property address on today's hot property is 2043 Buckingham Avenue in Clovis, California. The zip code is 93611. This particular home is a 3-bedroom, 2-bath, 2,476 square foot home that was built in 2007 and is located in Devonte Estates. If you're looking for an open floor plan, kitchen opens right into the living room area. Obviously, having an open floor plan is something that's very different from those homes that you find that were built in the 70s where you had a formal living room and a
playing. Yeah, the TV room.
Yeah, the TV room that's all chopped up. If you put them together, it sure open up that floor plan. But
Great for entertaining.
I guess that's not how they did things socially back then.
Things have changed a little bit.
Things have changed, yeah. Well,
the beef has gone on to college.
Well, if you're looking for an open floor plan in Clovis Schools, this could be the home for you. This particular property was appraised at $256,000 with an FHA appraisal. Again, it is a HUD home. If you'd like more information about today's hot property, give us a call anytime on our off-air number at 800-979-3958 or use press forward keyword KMJ.
Hot property.
I like it when you say that.
HUD property. You know what? Real quick, though, before we move on, that's a HUD property. So what's our time frame before those offers can go?
That particular property is on daily bidding. So
wait, it's already on daily bidding?
Yeah, it's on daily bidding. So it's been on the market, I think, 11, 12 days. So
it's a nice house, too.
Yeah, it is a really, really nice house.
So they just need to book an appointment. Right on.
Yeah,
okay,
exactly.
thank you.
Give us a call, and we'd be happy to show it to you.
Nice.
Well, after the break, are you upside down on your mortgage? We just talked about it. Where are you?
Hanging from a tree like a monkey.
Yeah. Well, there might be more solutions out there than really what you think, and we're going to talk about those on the other side of the break. You are not going to want to miss this. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valley White help. Valley White Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free, 800-979-3958, and put the seasoned professionals at Valley White Homes to work for you. Valley White Homes, NMLS number 342062, 235-952, California Department of Real Estate License 0122-8460.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, are you upside down on your mortgage? Well, there might be more answers or might be more potential solutions out there for you than what you think. Right, Michelle?
I agree. I'm adamant about
You are passionate about that
I am.
today.
You know, I'm passionate because I think the press and the news and there's a lot of unfiltered, unclear information, and so I think people truly...
I think you said that really well. Unfiltered. There is a lot of information that unfortunately homeowners get hit with, and it's hard to distill through that, or it's hard to process through that to really, so especially if this is not something that you do every single day. I take my car to my mechanic because that's what he does every single day. And he goes, oh yeah, your Hooter-Ratastatter is busted and it's going to cost you $1,000.
Well, and
and we're getting updates every day too.
Every day. And Matt Lauer's a great guy and cute and has a great little family and all, but he doesn't do mortgages.
Yeah.
So for him to educate the public, I can understand him relaying the information. Every press person out there is trying to relay it as best they can at the same time.
Right.
Unless you're in the nitty-gritty,
Unless you're in the
war zone, that's right.
Right. And you deal with this every single day. Well, if you did buy your home between the years of somewhere, 2003 to 2009, or you refinanced during those same years, you might find yourself, unfortunately, like many homeowners, underwater. And underwater simply means that you may owe more than what your home is worth. And what Michelle had mentioned earlier, what we were talking about before our hot property segment, is may. So where are we at? And that's the call to action in terms of, if you don't know, let's just start. Because oftentimes ripping the Band-Aid off is the hardest part.
Right,
let's
just
start.
clarity.
Well, here's one thing that I've been receiving phone calls on recently. People will call up and say, my mortgage loan is with Wells Fargo. It's with Bank of America, so therefore I can get a HARP loan, right? Not necessarily.
Right.
The big key is it a Fannie Mae or a Freddie Mac loan?
Right.
And
the clarity.
What needs to happen is the consumer needs to call either us or their servicer or somebody in the industry to find out exactly what they can do if they are underwater.
Exactly. It's the clarity.
And again,
thing.
they may or may not be.
They may or may not be.
Right.
And if they're underwater by a short amount, I mean, maybe that's repairable here shortly.
Right.
With the market, the way houses are flying off the shelves, we don't know. But they're not going to know anything if they don't seek out that information. So definitely we'd love to hear from them and have them
to give you
call.
a quick indication, there was a DU Refi Plus, and a DU Refi Plus is exactly what we're getting ready to talk about here in a second with HARP 2.0. Refinance the client they were paying 6 1/4. Refinance them. We're going to get them down to 3 3/4 on a 15-year note. Their payment's going up slightly,
but no MI.
Wow.
And the loan to value, they actually owe slightly more than what the home is worth. And to boot, they got a property inspection waiver, which means that based upon Fannie Mae's internal analysis of some sort of valuation on that property, the value that was input was considered deemed acceptable, and you get a property inspection waiver. So there's no appraisal on it as well. So there is hope. And I apologize for jumping ahead there. Well, what exactly? Let's line them out here. What exactly are your options? Number one, you need to determine exactly where you are at. We can help. Gently rip that Band-Aid off and give you an idea of where you are at. And that typically helps to kind of get the nerves out, shake it off, and ask more questions. So after that, what are our options? Well, first and foremost, just keep making your payments. And what if you can make your payments, but you decide that, or you get to that point where you feel like, wow, okay, I owe 2 1/4, and the house 2 doors down, same floor plan as mine, just sold for $100. That's a pretty common story that we hear in today's market.
Frustrating story.
Oh, most definitely. So what are your choices at that point? If you feel that you will never get to the point that you'll see or hear the word equity again where you live, just based upon the dynamics of the market, you know where you live. Hopefully you have a good feel as far as what the neighborhood's doing. Well, you've got two choices. You've got short sale, or what they call strategic foreclosure, if you can continue to make your payments, which is basically at some point you've decided I'm going to walk, even though I can continue to make my payments. Or next step is you could potentially refinance utilizing HARP 2.0, the Home Affordable Refinance Program, that removes the loan-to-value cap, right, Timmer? Removes the loan-to-value cap and unlimited for any type of property. Correct?
Investment property, which is amazing to me.
Yeah, isn't that the truth, though?
Yeah. It's interesting that more investors aren't calling on it, because I would have anticipated they would. I mean, why would you not want to lower your interest rate?
You know what would be a really interesting statistic that's just popped into my head when you said that, Timmer, is how many investors, what percentage of the REOs that we've seen over the last 5 years
are investors?
We're investment prospects, that would be interesting to find out.
Think of it. Back in 2006, how many times did you hear people, well, it's $125,000 a door, meaning that fourplex
right.
was $500,000.
Yeah.
And that was just, there was no way that rents
could cover it.
Absolutely, positively no way. But they were still buying them. It was still an investment. So, wow, I wonder if there is a way that we can figure out what percentage. Yeah. Be interesting to know. Well, refinance with HARP 2.0 if you are eligible, meaning if your loan is, as Tim said, owned by Fannie Mae or Freddie Mac, and we can help, or Tim specifically can help you determine that. If it's not owned by Fannie Mae or Freddie Mac, the next thing I always suggest is call your servicer, depending upon who that is. If it's one of the big five that was part of the $26 billion 49 states attorneys general settlement roughly 60 days ago, your servicer may be a little more pliable, even though that loan is not owned by Fannie Mae or Freddie Mac, because Bank of America's got some territory to make up an $850 million fine that they didn't pay, that they're going to streamline the short sale process. They're going to forgive principal. If it's not Fannie, Freddie, or HARP 2.0 eligible, call your servicer and say.
And the other option, too, is it FHA?
Oh, yeah. Good point. Because we're not talking about FHA loans here.
Right, but that is a possibility as well.
Right. Well, what if you can't make your payments? If you've experienced some sort of hardship, loss of a spouse, God forbid, loss of a job, loss of overtime or bonus income or commission income, or change in a job where you were making a lot more money in an industry that, and let's all face it, in today's world, industries... whoever thought Blockbuster was going out of business?
No kidding, huh? There's a lot of
now there's a
adjusting.
kiosk in my Vons, and it's a Blockbuster kiosk.
Wow.
Yeah.
It's interesting what's going on.
Well, potentially short sale in that particular instance. If you cannot make your payment, short sale would be that option.
And that's another thing to contact a realtor about, is so that they can work with the servicer so that you're not out on the street during the process and what you think's going on.
You brought up a really good point, Tim, because when you say short sale, how many homeowners out there are just paralyzed just by the simple fact that they say, I have no idea what a short sale entails, but for some reason they think that it falls on their shoulders. We have no idea what people think.
No, we don't.
True.
And the people are different as the day is long. And someone out there is thinking that, I don't want to have to deal with all that. Well, that's the great thing, is that there is documentation that we would need to get and submit, basically package and submit on your behalf to the servicer, and they will then submit it to the loss mitigation department. You probably need a couple signatures. There's standard in application and some disclosures, a letter of explanation if you're looking for relocation assistance. We'll talk about that a little bit later. We take care of all that for you. So don't allow it to be the case that you think, oh my gosh.
And maybe you should throw in there's no charge.
Yeah. Actually, that's a really good point.
Because
that is true.
I'm not sure if people know that or not, but
Tim, that is a really good
that's
point.
funny that you say that, because I actually am currently representing an attorney from another area, and one of the things, because they're looking for a family member of property here locally, real small, inexpensive property, but somebody did ask me who was riding in the car, and I thought, these are prominent, educated people, and they haven't transferred properties enough in their lifetime to really have a good handle on who pays what. And I found that interesting, because we make that assumption as agents that people just know. I was actually in a court hearing not too long ago, and they said, well, don't agents always get 6%? And I laughed. I said, well, that's split between all the parties involved and the brokers. And, I don't know an agent out there who gets 6% on a transaction. But, the misconception out there is definitely there on who pays for what and how that works.
Right.
And that can all be answered if they just, call and talk with somebody.
Well, just like when loan modifications was the big buzzwords back in 2007, 2008, beginning of 2009, before, thank goodness, the state came in and really ratcheted down in terms of what they would allow, what they wouldn't allow. People were getting just flat out ripped off. The
upfront fees that they were being charged for. Yeah.
Hey, pay us $3,000 and we'll work on a loan modification.
Where I got my haircut, or where I get my haircut from, the gal went through that same scenario. She told me about it, and she lost about $2,000. Can't get it back.
Right.
So you bring up a good point. How many homeowners out there right at the moment, when they hear short sale, they think, oh my gosh, we tried the loan modification, and I wonder if the agent that we're going to be working with is going to charge us the same way up front. Most folks don't understand if they've never sold a home before. That's not the way it is.
Right.
We all work for free in hopes that
it closes
with the conclusion of your particular transaction, that the lien holder actually reduces their net to cover the commissions that are actually payable as part of the transaction. So, and don't think that there hasn't been agents out there that for $1 have asked, pay me $1,000 and I'll list your property for you.
Oh my goodness!
Don't think it hasn't happened, which is the unfortunate thing. If it has, call us 800-979-3958.
I hope that's not true, but yeah,
Timmer,
nothing would surprise me.
I hate
out
to say
there.
it, but
you're right. You're right.
Alice in Wonderland. I tell you what, you follow that rabbit hole, and there's a lot of folks down there that are trying to do the just exactly that. So again, if you can't make your payments, short sale could be a good option for you. If you want to try to stay in your home long term, and if you can, and you can make your payments, and you want to keep that consistency as far as your family's concerned, as far as your kids are concerned, as far as schools are concerned, then talking about HARP 2.0 and whether your particular loan is eligible for a refinance is extremely important and could be an option for you. And that's where we ought to put really any of our listeners that do call in from today's show in contact with you, Timmer, so you can help them determine
directly
if it is a situation that their loan is eligible. Again, all you have to do is contact us on our off-air number at 800-979-3958 or use press forward keyword KMJ call Valleywide, and we'll put you in contact with Tim to kind of rip that Band-Aid off and determine if it is an option that...
Well, and I think let's highlight again, though, that you said there are some options for investors out there. I think that's important to make sure that they're hearing that, too. There are options for investors, so if you're not sure what they are, definitely give us a call.
Second homes, investment properties, 1 to 4 family units.
I think people get focused on maintaining their own residence and start letting those others go without... And the market's changing every day, and new products are coming out every day to facilitate better strategies for these. So definitely keep in touch with us if you're an investor so that we can keep you educated.
One last thing before we go to the break is I want to mention this because we've got a lot of things to talk about second half of the show with FHA financing is relocation assistance. We were talking earlier, and I guarantee you at least 50% of the calls that we've received on the last 2 weeks show or the last 2 shows it's been about relocation and assistance. So I'm going to ask our listening audience is, did you know that if you are in the process of negotiating a short sale right now and you have not asked for relocation assistance, you may be leaving money on the table. As little as $3,000, Fannie and Freddie will only approve, from what I have heard, a maximum of $3,000. But as much as $35,000.
Wow!
And I got an approval in my binder of a short sale, $35,000.
Is that based upon what is owed, or is it just case by case?
It's case by case. It's it depends upon who the underlying owner of that note is. Because I'll tell you this: GMAC $3,000. This one was Chase, and it was $35,000. So if you're not receiving relocation assistance, you need to ask the question.
Might be the bigger players wanting to give more to look a little bit better to get
most
away
definitely,
from
most definitely.
But here's the thing: if you don't go to somebody who knows how to get the information for you, you're going to miss out.
Yeah.
And I tell you what, I hope that, and I told every single one of the callers that called in, make sure that you call back and let me know how it ended up going down as far as were you able to get some relocation assistance, because man, I tell you what, that's a small
well, and they're already in the middle of the process, and so that certain things are out of our control to help them with.
Most definitely. Well, again, if you have any real estate or real estate financing related questions or questions regarding the information that we cover here on our show today, we'd love to hear from you. If we can help in any way, we'd love for you to call us anytime on our off-air number at 800-979-3958. Or you can check out our resources online at reofresnohomes.com. Or you can just use press for keyword KMJ call Valleywide. Oh, sorry.
That's okay.
I'm an overtalker today. KMJ. Okay, do it again. KMJ.
Call Valleywide.
To get connected to us anytime. Well, after the break, we're going to talk about one of the most popular home loans that you're going to find utilized by so many buyers here in the Central Valley that they are using to purchase their dream home. Stay tuned just to find out exactly what type of loan this is. Well, you already know. We already told you.
Cat's out of the bag.
The cat's out of the bag. We'll see you on the other. Cat's out of your money bag. We'll see you on the other side of the break. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there's an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
All it takes is one call to the professionals at Valleywide Homes, and you'll start building wealth in real estate. Whether you're looking for your first home, moving up, or your next income-producing investment property, let the experts at Valleywide Homes help. There's never been a better time to get into the real estate market. Visit our website at reofresnohomes.com or call toll-free 800-979-3958. That's 800-979-3958. And put the seasoned professionals of Valleywide Homes to work for you.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, like we told you before the break, we are going to take a long, hard look at FHA financing. You know, FHA financing constitutes such a huge part of our markets. It is the preferred, or wouldn't you say, Tim? The preferred,
in the Central Valley.
In the Central Valley.
For sure.
It makes up such a huge percentage. Nationally, back in 2010, FHA was predicting that next year, the same time, that they would see roughly, that FHA loans would account for roughly 50% of all the loans that were made nationally. Well, again, that's a national statistic. We have to look at our little market here. It's a huge percentage. What would you estimate? And just pick a number.
My files?
Yeah, 100%.
99.5 probably. Yeah. It's a huge market, and you know it's interesting. The subprime days obviously are gone, but FHA is very. In my opinion, it's pretty liberal with the credit criteria that's required. It's pretty liberal with the debt-to-income ratios. But there is documentation that is required, and sometimes that might get a little annoying to the customer. However, if you just prepare them, let them know this is what I'm going to need.
Set some baseline expectations.
Set it up front, and then it doesn't appear as though we keep on asking and asking and asking. Hopefully, everything's in line, and we know what to ask for as far as a lender is concerned. But every once in a while, there's a couple of things that may pop up that might delay a file.
And that's where setting the expectation up front in terms of, okay, here's what could potentially happen. We've provided all this documentation. And you never say never. There's always going to be things that the lender's going to, or the wholesaler or the lender's going to need up to the very end when it comes time. One last signature or one last updated paycheck stub or one last updated bank statement. In order to get that sucker funded. Well, Michelle, my little history buff here.
I'm not a history buff. I really am not. I just find
Take that back. You are too.
Okay, I love old things. I do. I like history. I like old things. You're right. I do. And FHA is an old thing.
It is a very old thing.
It's a very old thing.
Give our listeners a little tidbit of information. And
it does. Everything comes full circle. FHA created the Federal Housing Administration was created during the Depression, after the Depression had started, to increase home construction, reduce unemployment, get people jobs, start building houses, building wealth back for our country. So I find it really interesting that
to help stimulate.
Correct. Yeah. Stimulate growth.
Lenders were afraid to lend.
Right. They were afraid they were going to run on the banks. FDIC was created at that point in time. There was a lot of things that were going on to stimulate the country's economic situation, FHA insurance being one of them. So I find it really interesting that in this day's economy, we're falling back to that product that was created so many years ago to help stimulate.
Yeah, isn't that amazing?
It is amazing to me. Everything does go full circle, and we always talk about real estate being cyclic.
Right.
And we're back in that cycle. I don't know that we're creating as many jobs necessarily based on not yet. Inventory is going to have to go down a little bit more, I think. Before
forbid.
I know, but really for construction to start being stimulated.
Gotcha.
Prices have to rise a little bit here, I think, for a lot more construction to be taking place. But I find it interesting, and in past years, FHA actually provided a lower interest rate than other products, and I don't know that that's the case any longer either.
Oh, yes,
so
it is.
I mean, as far as a conventional 20% down?
Rates this morning on an FHA were at like 3.75, 3.625.
And what's a conventional today?
Just probably about just under 4.
Yeah,
it depends
on a big gap.
Yeah, it depends on your qualifications too.
Yeah.
But you got a huge gap between 20% down payment on a conventional versus a 3.5% on an FHA. So
Yeah, so I just find it really interesting that we're reverting back to some of those things, and I also found it very interesting as we move forward with our show and talk about the changes in the marketplace. I really do find it intriguing to learn a little bit about that period of time because of the New Deal and a lot of other things that came into play to help stimulate.
They're
and
still
get rid
viable today.
They are viable, or maybe just need to be looked at for adjustments. And I know we have a lot of political conversations, Craig and I, about the world we live in.
Yeah, the latest news last week was that it was a big blurb on the internet was Mitt Romney wants to close FHA, the Federal Housing Administration. I go, please. Okay. Well, and let's clarify real quick. FHA, the intent of FHA is to provide underlying mortgage insurance, correct?
Correct.
Timmer?
Right.
FHA doesn't make loans.
Nope, they don't do the loans. They're
insure loans.
They're insuring the loan for the lender to make sure if there is default that lender will be reimbursed for their loss.
They're made whole.
Yep.
Well, so when we're talking about the process of getting ready to get out there and look for your dream home, Timmer, first thing that you need to make sure that you do before you do anything
Just call me.
is called
Get pre-approved.
No, but the first thing is to get pre-approved. Whether it be me or somebody else, you need to get pre-approved with
and before you do,
obviously an FHA approved lender.
Anything, right? Before you do anything, before you start looking, before you put the cart before the horse,
Yes.
before you start calling agents, because realistically, number one, be considerate of folks' time in a market where it's so crazy. It's like preparing for a test. Do your homework, study, do those things that are necessary. Like we were talking about earlier in the show, as far as find out where you're at. Same thing. You need to call Tim, find out exactly where you're at. And so the first step in the process is getting pre-approved, which consists of pulling your credit,
Right.
gathering what other documentation.
Reviewing income documentation. You're going to, dependent upon if you're self-employed or if you work for somebody. Self-employed, it's going to be 2 years of your business taxes, individual taxes, obviously.
Gotcha.
And then if you work for somebody, it's going to be your taxes, including W-2s and pay stubs for the last 30 days. Okay. The second item is going to be what do you have in assets? So your bank statement, savings accounts, 401k,
Cash, liquid assets, retirement, things of that nature.
well,
that are
cash not so much.
Okay.
You have to be a little bit careful on that. And if you do have cash, it doesn't
No, I
necessarily.
meant cash in the bank. I'm sorry, I didn't mean they took your bag.
Mattress money,
Yeah,
right?
no, I didn't mean that. I meant
well,
cash.
you actually can. It's funny though.
Liquid would be my reason.
There are a number of rules that do allow for that. But you do have to be careful on how you go about doing it. So talking to someone that knows how to do it is a lot easier than walking in with your cash saying, here, I've got my down payment. Because guess what?
In other words, you've got to be prepared in order to do that. There's certain criteria you have to
steps
meet,
you got to take. Yeah. And you also have, including assets can also be a gift.
Sure.
So if you have parents, relatives, friends, somebody
But that needs
is
to be confirmed. And let's talk about that because I think people say, I have the money. Or, I'm good.
I'm good for it.
Really?
I'm good
so
for
then
it.
I push for the approval and I don't get one and I don't get, I'm like, you know what? I really like you as a person, but you're not going to be my client because I can't help you if you're not going to help yourself. And getting pre-approved is part of that process.
Here's the thing about the pre-approval process, too. Not necessarily everyone's going to get approved the first time that you meet with your loan officer.
Absolutely.
But I'll give you an example. I have a guy that I'm working with right now. I took his application, I think it was about September. And we finally are at a point now. He's got the money in the bank saved up. Took him till last month. He's been looking for a property. Finally got a property approved as far as a contract is concerned.
Right.
Bank statements are all clear. His check. He was out of work actually during this process, which kind of put a little bit of a slow down on it.
Kind of slowed his roll.
Well, with the recent rains that took place.
Right.
So back to work. That's all taken care of. So it's a little bit of a long process, but he's going to get in his house.
Well, and the nice part is he came and met with you and got a roadmap. How do we get you there?
Right.
And part of that as well is, and I feel so strongly about this, is setting that baseline expectation. Because if you've ever, and I've sat down with a number of buyers, and they've gone and gotten pre-approved, so they did that part right. And you ask them, so what is the maximum that you're pre-approved? Well, X number of dollars. And you ask them, or they may not know, or they say it's just setting that baseline expectation in terms of here's your maximum, but here's what you feel most comfortable with.
And that's what I always ask my clients is, where's your comfort zone on a payment? You're paying $800 a month now. Are you okay to go up to $1,200 because that's what you qualify for? But are you more comfortable paying that $800 or $900 because then we can work into that number? So it's you're right. It's where's the comfort zone? Because really, what people qualify for is usually more than what they think.
Well, it's more than what they are
feel comfortable with.
Right, comfortable
absolutely.
with. And I do say I've seen a big change in people's behavior when it comes to that after watching what's gone on the last few years.
Well, here's another
They don't
little
come in
side
with these
note.
big eyes with dollar signs in it going, I can do it. I can figure out a way to keep it.
This is
whatever. And
this
you're
is,
going, no,
this
no,
is
no,
full
no.
circle with what
Yeah.
we were talking about as far as people with underwater on their properties earlier. Say you got an investment property and the guy's charging you rent of $1,500 a month as a
Right.
renter. Now you can go out and buy a house. Same house may be better for a lot less.
That's
Right.
so true because we've said it before. I got a phone call from a client a couple months ago, and she was in Madera and looking for a property in Madera, and was actually looking at one of our listings on Williams. It was a HUD home in Madera, and list price was $102,000. And gave her an example of a payment, and she said, "Is that it? Do you have to add the taxes?" I know that's
the whole
principal, interest,
caboodle.
taxes, insurances, plus FHA's required mortgage insurance. She says, "I'm paying $1,200 right now rent,
Right.
and I
getting
could
no
save
write-off.
myself $250 a month, but just by buying a home if I qualify." So, a very good point, Tim. From comparing rental to or renting to home ownership. This is not just a feeble ploy on our part to say, "Oh my gosh, it's so much more for." It really is when it comes right down to it. And depending upon where you want to live, depending upon what you want to be able to afford, size of the house, the amenities of the house, where
Location.
the property, location, most definitely. It's huge, absolutely huge. The savings can be, that's for sure.
Yeah.
Well, talk to us a little bit as far as down payment's concerned. You were talking earlier, sourcing as far as monies are concerned for down payment. The down payment percentage is 3.5%?
3.5%.
Okay.
Unless you have a down payment assistance program.
Gotcha.
And there's different ones that are available out there. But
Is that where your bag of money comes in?
Yes.
Yes. Oh, all right. Good to know.
The down payment assistance program, I don't want to go into great detail on it, but
A whole other show.
yeah, but essentially you can get in for as low as 1%. So
Wow.
if you qualify, yeah. So that's a great deal.
And there's a number of different down payment assistance programs out there. There's not just one. There's a number of them.
Depending on the county you're in, depending
Gotcha.
upon what type of a home it actually is. There's one that's statewide. There's city financing. So quite a few available for the client.
Fantastic. Now, from a credit score standpoint, so many folks might be just paralyzed to call, just to pick up the phone and make that call to you.
Yeah.
From a credit score standpoint, what's the minimum credit score that you're seeing? And it sounds to me from our previous conversations that they're kind of all over the board. There's a general, nothing lower than.
Yeah. Your best pricing is going to be 640 or above.
Right.
Okay. And as your credit score goes up, the pricing may go down slightly. But we do have investors that are going as low as a 580 FICO score.
Right.
Now, on those scores, you do have to – the biggest thing is you have to be able to supply some sort of a rent history.
Gotcha.
Okay, which is a huge factor for that credit score. So rent history has to be either canceled checks or it has to be verified through a property management firm, apartment complex, something like that. So it can't be cash given to your cousin – for the last 12
sure.
months.
And he gave me a receipt.
Right.
Well, and suffice it to say as well, Tim, that if your score starts off at 580 and you don't necessarily like how that particular FHA loan is priced, because it is a little pricier at the 580 credit score.
Sure.
And you'd like your assistance as far as getting those credit scores up, that's another thing that you're able to. You're not a credit repair specialist, but there are recommendations that you're able to make. And specifically, utilizing the credit reporting company that you utilize, Credit Technologies, they'll tell you exactly, here's what you need to do in order to get yourself into a position where you've got...
And that's the thing is you have to look at every credit bureau because there's a way to get a quick score update and not cost very much money to do so. One of them might be just to pay down a balance a couple $100. One of them might be that you got something old on there that's not supposed to be there, and just get it removed.
Right.
So, depending upon what's on there, and again, we wouldn't know until we take a look at it.
Sure. Again, knowing where you're at.
Yeah. Well, it's hard to, because people will have general questions, and it's like, well, what if I do this? And it's like, I can give you a little bit of information, but without physically viewing the report, going it over with you, then we don't know.
Or they bring you in freecreditreport.com, and it's one bureau, and it's not a mortgage bureau credit report. It's
and the lender is not going to accept it anyways.
Right.
But you know what? That does give the client somewhat of a starting point of where they stand, if they even have a shot in the dark. So
Gotcha. Guys, let's take a quick break. If you have any real estate or real estate financing related questions or questions regarding the information that we cover here on today's show, we'd love to hear from you. Again, call us anytime on our off-air number at 800-979-3958, or you can check out our resources online at reofresnohomes.com, or just press for keyword KMJ.
Call Valleywide.
You're my Vanna. You know that?
Don't you see my arms? They're in action.
To get connected to us anytime. Well, after the break, we're going to continue this conversation with Tim O'Hare, our mortgage advisor, regarding FHA financing and help to give you some tips when it comes time for searching for your dream home. Stay right here. You are not going to want to miss this. You are listening to the Real Estate Radio Network here on 105.9, the FM KMJ.
This program is brought to you by the Real Estate Radio Network. Visit realestateradio.us for more info. That's realestateradio.us.
Thinking about buying a home? Find out how the HUD Home Store can help you. Visit HUDHomestore.com. Look at HUD homes available for sale near you or nationwide. Why HUD Home Store? HUD will pay up to 3% of the buyer's closing cost. The price of the home is based on an FHA as-is appraisal, which is already completed, saving you an average of $400. And there is an owner-occupant priority bidding period during the first 30 days. Want to know more? Visit HUDHomestore.com.
Mortgage interest rates are at historic lows, and there's never been a more affordable time to buy real estate. Whether you're looking for your first home, moving up, or your next income-producing property, let the mortgage professionals at Valleywide help. Valleywide Homes has been helping homeowners with their mortgage needs since 1997. When it comes to the Valley's real estate, we know our way around the neighborhood. Call toll-free 800-979-3958 and put the seasoned professionals at Valleywide Homes to work for you. Valleywide Homes, NMLS number 342062, 235-952, California Department of Real Estate License 0122-8460.
You're listening to Real Estate Radio Network with local expert Craig Barton. Now, here's Craig.
Well, we're continuing our conversation with Tim O'Hare, mortgage advisor from Valleywide Homes. With regards to FHA financing, one of the questions that I didn't ask before the break, Tim, was with regards to FHA financing must be
owner occupied.
So
you have to live in the property.
Got to live in your
no investors.
No investors need apply.
Well, and what's the time
Investors
frame?
are our friends.
What's the time frame? Because I think that's important. I have a couple who's getting married soon. One's buying an FHA over here, one's buying an FHA over here, but eventually it's going to roll into an investment.
Actually, if they're planning on moving into the property as an owner occupied, in that current situation, there are exceptions.
Okay.
So it doesn't necessarily mean it's a no.
Okay. Gotcha.
But as far as residing in the property, they want you to reside in the property for at least 1
year. Yeah.
Okay. That's what I'd heard. But okay, cool.
After that, all bets are off. You can move out of the proproperty if you want to save up your cash and
then create an investment and move a year later into another FHA.
Exactly. Now, one of the things that we were talking about on last week's show with regards to condition of a property, in today's market, we see a lot of competition out there, but we also see some properties that are a little rough around the edges. And Michelle, talk a little bit as far as conditions concerned and the type of financing that can piggyback on, or that really is government-insured financing as well, that can help get you into your dream home.
Well, when people talk about general FHA, which is what Tim's talking about, that's a 203B is how they classify it.
Correct.
When you're dealing with a property that has some deficiencies, maybe it's got some broken windows or needs some wiring or needs new carpet, whatever, there's a product that they have available called a 203K, which we talked about last week, which is a rehab or renovation loan. Again, owner-occupant only, but they will allow you to create an escrow account included into the loan that will make those repairs for you. Again, Still the same down payments, same interest rates, generally speaking, as a regular FHA loan. So you're not dealing with like a construction mortgage of 9 or 10 or 15% hard money. You're actually doing a renovation FHA. So it's there to help us to repair homes and neighborhoods, which I think is an awesome
Which is phenomenal. And the same mechanism is in place as well for HUD homes, because with any of our HUD inventory, the appraiser goes out and appraises the property. If there's any repairs that need to be completed, they call those minimum property requirements. There's a repair escrow. So nothing's done prior to the close of escrow. It's all done immediately following the close of escrow. You've typically got roughly 10 days, and it's not brain surgery. It really
not at all.
isn't.
If I can help with them, they're not. Trust me.
So Tim, over the last 5 or 6 years, we've seen. Oh, yeah, it's definitely.
We're going to catch you up.
You're way smarter than what you're sandbagging. Trust me. Over the past 5 or 6 years, Tim, with so many folks that have either had to file bankruptcy or have lost a home to foreclosure.
Right.
Tell us real quickly, what are the time frames that they have to wait after filing bankruptcy, after unfortunately losing a property to foreclosure or short sale?
The time frame right now, and I say right now because it's ever changing, 2 years for Chapter 7 bankruptcy. Chapter 13 is a little bit different, okay? But there are examples where you can go as low as 1 year out of the bankruptcy. Yeah, if it's medical, things like that.
Gotcha.
And then the foreclosure is usually 3 years.
Gotcha. Foreclosure. And short sale is 3 years as well.
Correct. Yeah.
Unless, of course, you were current with your you were current prior to the home closing. And then you're eligible immediately, what I just read recently.
Well, and we just got an update from an investor yesterday that actually shortened it down to 2 years. So that's
so the market is adjusting.
Oh, that's right.
That is brand new. That just came out like
Well, I think it's interesting that the market is adjusting for those needs because they know this hit a huge number of our population, and if they stay with the stringent guidelines they used to have, it debilitates the economy. So that they are making those adjustments.
Well, again, we're seeing history. We're seeing history in the making. What we're seeing today is going to be ever changing and ever evolving. The landscape is going to be ever changing. So if it is a situation, Tim, we've got to, number one, first thing to do, we've got to call Tim. Second thing is get pre-approved. Get informed, and find a realtor, Michelle. We need to Tim needs to put them in contact with you so we can determine your wants versus your needs and then save your cash.
Yeah.
Well, guys, thanks so much. Tim, mortgage advisor with Valleywide Homes. Again, if you have any questions, call us anytime, 800-979-3958, or check out our resources online at reofresnohomes.com. A big thank you to Michelle Pettis-Cavalli for joining us in the studio today. Always, Johnny B., you make us sound so good. Thank you, buddy. And our goal, remember, is to get you the timely and accurate truth regarding your local real estate market so we can help bring you back home. Don't forget to tune in to the Real Estate Radio Network next Sunday at 7 a.m. on 105.9, the FM KMJ. Make it a great day, Central Valley, and we will see you next week.
Bye-bye.
The preceding program was paid for by the Real Estate Radio Network.